Welcome back. You're watching Taking Stock, and what a week we had. The best trading week in a really long time, 7 years to be precise. We have two more guests joining us now. First up, we have Dipen Sheth, Head of Institutional Research at HDFC Securities, and in a bit, Siddarth Bhamre, Head of Equity Derivatives at Angel Broking, will also be with us. Dipen, hi, good to have you on the show. Two questions that I want to address, or two topics. One, what do you make of the return of FII inflows? And two, what do you make of the big rally that we had at PSU banks all through last week?
So the second part is very easy to answer. It's been more of Siddarth's week than my week. So it's the FNO guys who've been freaking out here, and entirely driven by nothing that has changed on the ground but the FII money which is coming. So both the questions are actually interlinked. It's not just the PSU banks which have shot up. There's a whole lot of other stocks which have also moved. And we've seen this earlier. We've seen this for a number of years in the Indian markets, that once FII flows come back, and so here's the numbers just to get some perspective. X today, we'll get the numbers for today in a bit, but in the last 10 days FII inflows have been 1600 crores. But in the last 3 days, X today again, FII inflows have been 4400 crores. Okay, so even the 7 days prior to those 3 days saw close to 3,000 crores of net outflow, 2,800 or whatever. So it's a little bit of coming back of FII money over 3 days, something like 1,500 crores on an average, and see what it does to the markets. See what it does to the front lines, and that's where much of the money gets allocated. And sure as hell, PSU banks were completely beaten down. You've seen large names like a PNB, BOI having cracked 30, 40, 50% from even 3 months ago. So some of that money would have flown in, and then obviously all the FNO guys, Siddarth and his friends included, would have pounced on the opportunity and started running up huge positions on futures. So it makes complete sense if you ask me, really.
Okay, but for our viewers, at least I think 80% of the viewers who are watching this show would be retail investors. Right. So for them, what is the advice now? Because it's very confusing. First part of the year we've seen a big fall. Now the markets have suddenly gone up. Sensex is up 1600 points in 3 days. Right.
What is 500 on the Nifty, or call it what you will. So Sonia, here's the thing, and I've been sounding a little stupid when I've said this for so long, and the last 500 points will bear me out. And again I'll go right and again I'll go wrong, but the thing is that you need to find good bottom-up stories and stay invested. Do not try to gamble in the markets. Don't try to fish for things just because they've fallen. Buy good solid companies and stay invested and hold on to your stocks. Now if you've actually backed this buying with some diligent research or some fact finding or some good advice, then if stocks fall, then you should be averaging on the way down. And stocks will fall and they will rise, because that's what the stock market is all about. It's a volatile asset class. Every time FII money gets out, you will see a crack in the markets and you'll say, oh my God, I made a mistake. But you haven't, at least if you're in the right stocks.
Okay, that point is taken. You referred to Siddarth, so let me get him also in this discussion. Siddarth, I remember at the start of the series you were quite bullish on this market, but what now? Do you think that this first part, which a lot of people say that the easy part is done, or do you think we'll still have much more rally from here on, purely backed by incremental short covering?
Anuj, was that a really easy part? I don't know. To predict,
in hindsight, it was easy, but yes, I mean, of course, from trading point of view, it wouldn't have been easy.
Yeah, so I would first like to give some backdrop that why we were not negative for beginning of March series, because after this rumor came out in market that government may increase long-term capital gain or introduce long-term gain capital tax, we were seeing some stability around 7,200, and from 7,200 to fall near to 6,800, we haven't seen FI selling, we haven't seen DI selling, and it was more of sentimental selling which was happening, and we did mention about this word sentimental selling then. Similarly, the bounce back which has happened till 7,200 was again sentimental buying, and then short covering has started. Mind you, on the budget day bank Nifty, which we are talking about, that how a lot of short covering is happening over there, and yes, indeed it is happening. But budget day and next day we had seen formation of long positions in bank Nifty and the other stocks. It is last 2-3 trading sessions, including today's, where we are seeing short covering, and there is some more short covering which is left. Answer to what next? I feel we are talking about how FI's liquidity is coming back. but we need to break up that liquidity, that where exactly this liquidity is coming. So you guys spoke about cash market and the impact of that buying on markets, but Anuj, you will appreciate the fact that more than 9,000 crores of buying has been done in index options in last 3 trading sessions. After 28th of October, if I'm not wrong, 2015, put call ratio has gone above 1 levels. Otherwise, last 4 series in fact, put call ratio was trading below 1, mind you, around 0.8 or so levels. Why that has happened? Because FIs have bought huge amount of put option, more than probably 2 to 3 times of what they bought in cash market or index futures. This should not be taken lightly. I'm not saying market is going to correct immediately. Things have not changed. We have got a bounce. We are not into bull market again. It can be a volatile market. We have seen that the implied volatility of call has reduced, but put has not reduced that much. So I will take some profits on the table right now. I am not shorting, but I will be open to ideas of shorting as well in this market. Not index, but probably stock specific.
Okay, fine. That caution is much needed anyway after the big run up we've seen. But Dipen, I was going through the note that you've put out, and you do say that select stocks have fallen terribly from their peaks and offer good bargains, and you've added Maruti into that list. Apart from Maruti, which are the other stocks that are offering good bargains now?
So if you look at the large caps, and just if I can tie in with what Siddarth was saying, that his tribe looks at things on a month-to-month basis, or maybe even an expiry-to-expiry basis, and I perfectly respect that. It's just that we are in a different business. You have to take a 1 year or a 2 year call. So I'm not so worried about whether we are going to go from 7,000 to 7,500. At 7,500, my worry is going to be, are we in any danger of falling to 6,500, or is there more opportunity to go to maybe 9,000? And I will obviously give myself a year or two for that eventuality to play out. So I don't think my thesis has changed materially from 8,000 down to 7,000 and back to 7,500. We are in a long-term structural mend. Now hold that thought for a minute and we'll come back to what you said. Right. So stocks. So on the large caps, the obvious guys to buy, unless there is a structural change in the business, are the guys who've fallen for no discernible reason. Okay. So, and you can always invent and discover reasons why something should have fallen in retrospect, but largely the structural story seems to be, intact. So there was a big challenge which played out in the case of, let's say, Tata Motors, because of global demand apparently, which was going to crack, and by the way, that fear has not proved to be well founded if you look at their latest US sales, for example. And if you just look at year-on-year numbers for Tata Motors, and you will see that this is a company which has consistently grown every year in numbers after the global financial crisis. For Maruti, I think the structural story is very, very much intact, and now even with the rural fillip that has come into the budget, and with the 7th pay commission, and these are old arguments, I'm not saying anything new about Maruti. There's going to be 20-25% earnings compounding over the next 2 years, and it's down to
35, 50.
Yeah. So and our target price is close to about I think 47.86 or something on this one. And if you look at the huge amount of depreciation that they book, and if you add that back to earnings and look at cash earnings, it's probably available for 10x or something, 9x, 10x on F18 basis. And I don't think there is a substantial risk to earnings there unless there's war or something.
Okay, so that's a positive view on a couple of stocks. But Siddarth, what about trading ideas? At the end of the day, we have the traders who still make the lion's share of overall turnover. So from that perspective, what are the stocks that you look at, either shorting or going long?
Yeah, so I blend up both, and just one more point, Anuj, that liquidity parameters like gold, even in this global rally, has not corrected and gold is inching up. So we can take cues from there also that we should not go gaga over this bounce back, and this is not that it is taking us to 8,000 plus levels immediately. So there is some worry still in the global situation. Coming back to stocks, Infosys has shown decent bounce back from 1100 levels to 1170, 1175 it's trading. We haven't seen any formation of long positions. It is merely short covering. If you look at multi-month charts, between 1180 and 1210, 1220, this 30-40 odd point zone, it has very strong resistance, and I'm anticipating fresh formation of short positions in Infosys at this point of time. I don't have very aggressive downside targets, but I'm expecting 70-80 rupees fall. For a positional trader, it's quite some in a large cap stock. 1108 is my target, and 1204 is the stop loss which I'm suggesting to maintain for this short trade.
Okay, gentlemen, we've run out of time. We would have loved to chat some more, but we all have a big, long weekend waiting ahead of us. So we're going to take your leave on that note. We've tried our best to decode the big rally that we saw last week, and hopefully for the bulls, that rally should continue into next week. That's all the time we have on this show. We'll see you again with all the market action on Tuesday morning. Thanks for watching.